The Hedgeless Horseman here. It's February the 10th, 2024. I'll be covering a lot of stuff today. First of all, I'm gonna go through where we are in terms of, undervaluation, some thoughts from some people I think are pretty good contrarians. Also, what this market does to people, and also, discuss the enormous amount of bashing that happens during bear markets in this space. First of all, here's a tweet from our dear Aaron. GDX 4% from new 52-week low, SIL SILJ 50% from a new 52-week low, NEM new 52-week low today. No, gold is 5% from an all-time high. So I mean, obviously, that alone. That's what the Ross Beedis and Rick Rules are talking about, and Gustrom talking about the biggest dislocation he's ever seen. So I mean, when you see that stuff, that is just, I was gonna say, remarkable. That's like a car company that's steady sales, and the let's say the prices on their cars which they are selling is at near all-time high, but the car company itself is priced at a 1-year low. I mean, I don't know what you can ask, for a better sign in terms of, hey, do you think these are cheap? Is this sector undervalued? I mean, of course it is. That's the crazy part. But nobody's buying despite that. It is absolutely crazy. And this is why it's like the few people actually understand that, act on it, they're going to make a lot of money. Everyone else, which is almost at least 95% of people, they're not going to do anything. They don't even see it that way, and they're going to be bitching about how hard the markets are forever. So this is a quite interesting one. This is the gold divided by the Huey, gold, Philadelphia Gold Mining Silver Index, something along those lines. And here I have Huey down below. I guess it's somewhat like GDX. I only have it back to 96, but you can obviously see where, I mean, when this is going up, it means that gold is outperforming juniors, and it's a sign that, well, I should say gold miners, outperforming gold miners, and it's a sign that, hey, if it's high, it means that miners have greatly underperformed the price of gold, which they're selling or looking for, so that might mean that the equities are very cheap. It doesn't say anything really about if gold is cheap. Well, I guess that I was going to say, well, yeah, basically that. I mean, if this sector or if this ratio is high, it means that gold has done a lot better than the companies that actually sell the stuff and look for the stuff and have the stuff. So gold in the ground is cheap relative to gold above ground. That's basically, yeah, I mean, that's the best description, I think. And this, of course, does not account for, well, it includes, dilution. It doesn't account for inflation and all that. So, I mean, there's other stuff that goes in than just, well, it's, 1,000%, 1,000% cheaper miners here than here. That's not how it works. Still, I mean, you get a sense of the if gold miners are undervalued, at least, and you can hear. I mean, there's some prominent like tops. This is the 2000 bottom, for example. It reached this level, meaning gold miners greatly underperformed. Shitty market for gold miners. Shitty market, absolute crap. That, of course, ended, because it always ends, and that was the start of a 11-year bull market. That's why I keep saying, a year here or there when it comes to when this bear market actually ends doesn't really matter. If we're here or here or here or here, who gives a shit? If you, I mean, we're so far past the point of selling, it's not even funny already, okay? just based on valuations alone, there's no way you should be selling. And again, it doesn't matter if we're here or there. It's like we're gonna be in for a big bull someday, okay? 100% is gonna be nothing. So my point is like when people are impatient, like, oh, but it could be, months or even years, like, it doesn't matter. That's what you don't get. If you whine about the fact that, oh, I mean, Rick Rubin believes it's going to turn this year. I don't know. If it's next year, who cares? It's still going to be worth it. So it's no point. You don't understand where we are or how this sector works if you're constantly bitching about, oh, this bear market is dragging on. I can barely hold on. Then you have no idea. I mean, you don't know what happens after a bear market bottom, especially a big one as this, because you've probably never seen it because you're accustomed to always buying high, and that's what 95% of people do. They can't keep their eye on the price, which is what's going to happen when this turns. Anyway, this is the 2008 bottom, also a spike. That was here. This is where, like, Bear Creek Mining went up 2,000% in 3 years. How long should you be able to wait for stuff like that to happen? 10 years. And then it actually ramped quite a bit without really a serious relief rally. And here it spiked a couple of times, and you can see it was basically grinding. I remember this period very well. And then this move here, which was also just, what's that, like January to August, 8 months. Best quarterly mining rally. I think the Q1 was the best rally the mining sector had ever seen. Somewhere along those lines. My portfolio went up 500% from the bottom here. So you can imagine, I was down 50%, 54% going into the bottom. Did it matter that much given that my portfolio went up 500% after? No. Then my portfolio went down around 50% again. Then I think it went up like 400% over this period of time. And now, I mean, nowadays my biggest position is in a private company, so I don't even know, that's not even trading. So it's hard to say. The most hodl portfolios are like maybe up 15% over this period of time or something. And we're up here in this ratio. Yes, the ratio has gone higher. And that's what, people scare themselves with. They say, well, it can always go lower. Yeah, it can always go lower. The point is that it doesn't matter. It doesn't matter. If you bought here, it went like that and then up. Like I did. Didn't matter. If I added more, when it got cheaper, I just ended up making even more money. Then, if it bottomed here and went there, I made more money because it dipped, so I could buy more and then went higher. So if this goes like that before, who cares? Just a bigger opportunity, because you're gonna make money from these levels. You're gonna make even more money from low levels. It's not that how most people see it. If they're in here and it goes there, then it's like, oh, I've lost money. Yeah, if you sell, you've lost money. Otherwise, come back in a year or two and see if your portfolio actually lost money. It's all based on like time. It's the oscillations. So obviously we're getting quite extreme, and it's like if we can see the lower peaks. Here was a peak. That was actually this bottom here. Right, it reached this level. That was a 2-year bottom. Great buying opportunity. This was here. That's a pretty decent rally. I don't know what, I think this is when, what's this one, like Bear Creek, went up like 200% or something, or 100%, somewhere along those lines. So there was a pretty nice rally in juniors actually. I think a lot of them went up 50% at least. But that was not the start of the real bull. And that's why I keep saying, if you wait for all these signs, that's like, oh, I'm going to buy when the bull has started. So it goes up 100, 200%. I thought the bull had started. But if if I would have waited and bought on that, exactly trying to time the bottom and time the bull, etc., I would have lost even more money. Because then I would, let's say I sold wherever, bought here, and then I got slammed again. Because juniors have done way worse than the Huey. But point is, we're up here. These are very extreme levels. In the last, since 1997, we only had a brief period where the ratio, where gold miners have underperformed gold this much. That was obviously here from here, which means this. Now, for some reason, I can't paint. But basically, this period here. And I think a few days or a week down here. So imagine how extreme this is. The only time since 1997 where this ratio has been higher was for a few months down here and for like, I don't know, a day or a week here. Both times, my portfolio basically went up like 400 or 500% afterwards. Just something to think about. Of course, it's like I kept saying for a long months, years. There's like we're past the point of selling. It's just getting more and more and more absurd. And I keep saying minus 50% is not even a problem. Just look at a single mining chart or junior chart that's been around. So when I see people complaining that they're down after a 3-year bear market, I almost lose my mind, because it's like impossible to reach some people. If you think it's a problem that you're down 50% in the worst bear market since, I don't know, 2001 or something, and you're not even aware what happens after the bear markets, then it's like, what's the point? What's the point? But that's what Rick Rule actually said recently. He said that people, that's why he's attracted to gold juniors and a bunch of other juniors now. That people have forgotten that the juniors can move up. And that's why I think most people, I wouldn't be surprised that if the majority of people that actually follow me now, they got in around this point, because I keep seeing so much stuff about it feels like it's coming from people who've never seen even a bull run. So if that's the case, I mean, that's unfortunate. Nobody knew this was the top, but it was unfortunate that in hindsight you bought high. That does not mean you sell low. So here's like Gary Savage. I think he's actually a very good contrarian guy, because he always says basically what almost no one else is saying. He's a trader. I'm not a trader, so I have different reasons to being bullish, kind of. But he really understands psychology. So he did a few posts. Let's start with this one. There are so many people totally clueless of how markets and human nature work. Human emotions cycle back and forth from extreme greed to extreme fear. This is what creates the conditions for bubbles. It also creates the foundation for massive bull markets. Obviously, this was extreme fear, extreme fear, extreme fear, extreme fear, extreme fear. We're at extreme fear, as you can see. I mean, again, according to Rick Rule, this is worse than here. Gold is only a few percentage points from all-time highs. Miners, on the other hand, are down huge from their all-time highs. This is a perfect example of human emotions running amok. It is also setting the stage for what will very likely be one of the largest bull markets in our lifetime. If you need a reason to be bullish, that's it. At some point, any sector becomes just too damn cheap, insanely cheap, stupid cheap. Miners and silver are approaching those stupid cheap levels. That's what people forget. Every single time we reach either extreme low, or let's say extreme highs, extreme lows, etc. Everybody forgets that the market is cyclical. Here, it's pricing in absolutely 0% chance that there's going to be any sort of bear market coming in the next 5 years or so. Here, it was pricing in no bull market as far as I can see. How do you know? Well, it went up like, I guess GDX, I say Huey only went up 100%, but juniors went up 500 to 1,000%. That is so abnormally large returns. That's like, Sigma events, Black Swan events. So basically, they were obviously pricing in no chance of a bear market happening anytime soon. And then it happened. And anybody who bet on the fact that, whoa, this sector never stays this cheap forever, so I buy now, and doesn't matter really how long it takes for it to turn, because when it turns, it's going to, pay off 500 to 1,000%. And it did. And the worst mistake you can possibly do is sell late in a bear. And the only thing that's worse than selling late in or deep in a bear is selling the day after. Because that means it's one day closer to the bear. So selling becomes worse and worse and worse the lower and longer this takes. Same here. You can see it, obviously. If it was bad selling here, yes, traders will say, well, if I sold here and bought there, I'm a genius. The thing is that nobody knows when the bottom is in. That is the thing people always try to do. Everyone says, well, I'm going to wait. I think they can fall lower. That's what people say all the friggin' time. Did it matter in then? No. If you started buying even here and just bought for like 2 years or 3 years, whatever, your average is down here, you would have made a shit ton of money, much more than everyone that's trying to trade every 30% move down here. And that's what Ross Beatty says, that people who right now, for example, they sell, if a junior goes up 5, 10, 20, 30%, they sell that and think they're clever. I mean, I'm all for value shuffling. I'm more on the line. It's like, you don't really have any, let's say, exposure. It's like you're only, you take small stabs here and there. It's like, oh, I got 10, 20% on a junior, so I'm selling that, and now I'm out of the sector again. Basically, he means that's missing the whole point of where we are and what comes after. And then you're not even prepared to catch the big move. And like he says, that first it's going to be met by disbelief, and people are going to sell the first 20, 30, 40, 50% up, even up to 100% higher up, and not come in yet, perhaps, because they think, well, I've only seen a bear market. This market never keeps on going. But it did. It does. It does keep on going. And then you're going to be left off the station. You sold it, up 30%, you buy in 100% higher later on, perhaps, when you're pretty convinced that the bear is on. You might have cut your future returns by, I don't know, you might receive like 300% less returns or 200 something. I mean, it just becomes extreme. Anyway, the last time this occurred, it produced a bull market that ultimately gained 1,700%, 1,700%. This one will be bigger. We are watching and waiting for and now basically for his newsletter. So he's a trader, and he's more, I think, this is the Huey, for example. I don't dare to trade this. And many of the juniors, if I even try to get my position in, if the positions I have in some of these juniors, which might have taken weeks or months to buy or whatever, low liquidity, we're at record low liquidity levels. If I start buying, well, first of all, let's say he's wrong, and we don't get a lower low. First of all, there's no guarantee we're gonna have a big flush, and not at least in your, let's say, favorite juniors. If it happens, there's no guarantee you're gonna get a full position, and again, if the liquidity is pretty low after this flush or in this flush, you might drive up the stock 20-30% just getting in, especially if you're trying to get in a hurry. So for me, that's too greedy, but I'm not a trader, and this is obviously more liquid. It's like Huey there's no problem getting in, but some of these juniors, and you can see it all the time, sometimes you're the only guy in the entire world that's buying them. What do you think is going to happen when 20 guys want to get in, or 100 or 200 guys? If If $5,000 can move a stock 10% now, imagine when 500,000 wants in. That's the thing. And he did another post. No, that's not it. This is one. Also Gary Savage. I'm sure most of you have heard the expression "buy when there's blood in the streets." The problem almost everyone has with this when it's applied in real time is that they can't pull the trigger, and that's again, you're seeing that now. I mean, some of these stories have, let's say they have a positive fundamental trend over the last 6 to 12 months. Like, news has been getting better and better. Share price hasn't really moved, or it's actually gone down because of the shitty sentiment. And I've said this before. I'm way more bullish than I even appear publicly. And still, in some of these stores, I'm almost the only person buying. So that's just proof that that's the case. Nobody's pulling the trigger. They conjure up reasons for why this time is different. You see it all the time. No, it's inflation, it's the rates, and the blood is justified. I mean, I see that all the time. This is what emotions do to people. They make you stupid. Folks, there comes a point when even a crappy business is just too damn cheap. When a sector has been beaten down to the point of absurd valuations, two things happen. The crappy business goes bankrupt, leaving the well-run businesses, and conditions begin to improve. Profit margins start to expand. In the case of the metal sector, gold will break out about 2,100 and start the next leg of its bull market. The well-run mining companies are going to start mining money hand over fist, but at the bottom, no one has the foresight to see this. Well, except me and a few other hardened professionals that have seen this before. I have seen this before, but of course, I mean, if you listen to bashers that only is like, oh, your juniors are down over the last 3 years or something. I mean, most people think you're a clown. I mean, I battle with people all the day, or every day. And when you ask some, it's like, oh, so what's your long-term returns? They have crap long-term returns. And it's like, if they actually say what they have, it's probably even worse in reality. But so they don't get it. But they don't want you to be right either, because that means they're missing something. That being said, we should be able to time a better entry as buying on Monday. But make no mistake, a buying opportunity setting up that will be one of the most profitable of our lifetimes. And I talked about this in the last video, where I said that most people kind of, myself, feels like, 100% rally, is a big ask, a tall ask. And I've seen people say that, it's like, oh, I only hope to get 100% rally and, go back to even if you're down 50%. That's why I do think it's going to be, actually, like always, it's the worse it gets, typically the bigger the bull. And this is, according to Rick Rule, worse than 2016. So I guess it's more like 2001 levels, meaning down here. So down here, I bet people were just happy to get 50%. I mean, to even see 30% in a week in a stock, in a gold stock, was probably, that was very rare. Like, similar thing here. Very few stocks are actually going up. And if they go up for a period of time, they get sold off. So nobody expects even 100%. That's why it's cheap. Here, people didn't think there was a chance of even a 50% rally in the next year. That's how ridiculous it gets. So it all fits. And then we come into what this sector does to people. So this is Doug Ramshaw, CEO of Minera Alamos, and he's in some other companies as well, I think. Well, he's in District Metals, for example. So his tweet here, to me it's very important for shareholders to be able to contact management, and I make that very easy with cell phone on the bottom of every release, but there's a way to go about things however frustrated you may be. Fortunately, most are amazing and supportive. So this is the kind of emails he's getting. And we're talking Minera Alamos, where he's like, I think he's the biggest shareholder and buys in the market all the time. So here we have one guy, it's like, Conquer Collective, you're a fucking joke of a CEO, this is the worst. So, it's just absolutely crazy. So somebody's pissed off and it's like, I'm basically calling him trash, a fucking joke of a CEO. So this guy's obviously pissed that there exists a reality where a gold junior like Minera Alamos can be down over a period of a year or two. That he's not immediately in the green. And I don't know what kind of guy this is, but it's like, if I'm unhappy with a company, I sell. I don't think I have ever sent a nasty email to anyone. And I've lost money in a lot of stocks. Sometimes it's, just, let's say bad luck, if you can call it that, with high risk, high reward stories. They simply do not end up finding a discovery, and that's the norm. But there you don't really have anything to blame, because that's okay. They drilled, made a bet. If there's maybe 10% chance of success, it might have been cheap, but 90% chance of failure, they didn't hit anything. That's it. So Mother Nature was not bountiful. Yeah, I mean, it's just absolutely crazy. I mean, this guy obviously has no awareness. He has no clue where we are in terms of like how markets work. That this is sentiment related. It's not Minera Alamos doing anything wrong. It's sentiment related. It's worst sentiment since 2001. Again, according to Rick Rule, who has seen more stuff than most. He has no awareness of that. That's how markets work. That if the sector is shit, it's very hard to be making money in the sector. If it's the worst it's been in 30 years, it's, only a very, very rare cases you would be up on stocks in that case. You were not up on a lot of stocks, gold stocks, going from here to here. Must be, I mean, if you're lucky, you have a couple or something like that. In the end, from here on out, the companies that were around, probably every single one of them went up. That's how sentiment works. You lose on pretty much everything, then you make money on pretty much everything, lose money on pretty much everything, make money on pretty much everything. Now we've lost money on pretty much everything since 2020. And when the next bull starts, we're gonna make money on pretty much everything. That's how it works. But he can obviously not see that. And he blames the CEO for everything. And it's not like he, sells out or anything like that. I mean, this is the weakest, most pathetic emails I think I've ever seen. This is like a kid having a tantrum that the world is unfair. And he wants the CEO to somehow fix the share price. Like he can control it. Like it's Doug that's doing this personally. He's torturing this guy. What of Victory Lap? Minera Alamos shareholders should puke anytime they see your face in public. I mean, it's... I don't know if he's paid or something. I doubt it, because it's like sending private emails. But this is a completely unhinged person. He shouldn't be even near the stock market. He has absolutely no chance. Do you think he's buying this sector right now? Absolutely not. And let's look at Minera Alamos. Okay. Since top tier in late 2020, again, nothing special at all. Yes, it's from the highs in the worst bear market since I don't know when. Now it's down 62%. And this is a company that's relatively low risk. I would think so, at least. I mean, huge insider support, serious, mine builders. I think they have built a few mines or are building. I know a lot of people like it. But still, that's down 63% in the worst sector. If you zoom out, I mean, that's the thing with perspective and time. Has this been a bad stock? especially when accounting for when we are in the cycle. No, this has outperformed. Let's look at GDXJ here. Is this right? This can't be. I don't think this is. 1 second. I'm trying to get it at equal scales. I mean, here's like 9 cents, and here's up, 200%. So I don't think the scales are right. But unfortunately, I can't get it right. Anyway. So, okay, when would you be pissed? Nobody, again, given where we are in the sentiment cycle. If you look at Bear Creek Mining, which I think is closest one to the average, closest proxy to the average junior, it's down below the 2015 bottoms. Anybody that bought this company from here to here, and recently in the dip buy, is neutral or up. If you bought it here as an average, yeah, you're down 47%. And that's not even a lot in this sector. That's the thing. If you're one of those that only buys when it has run a lot. And again, even if the fundamentals go like this, when we go in to a friggin' the worst bear market since 2011, 2001, 3-year bear market, it doesn't really matter where the fundamentals are. I mean, you can't really spot them in a lot of the share prices. So even if you bought the high, 62% is not a big problem. I got stocks that's like, and have had stocks that, down 80-90%. But the point is, this is not even, they have pretty much, as far as I can see, done what they've set out to do. They probably have more value than they've ever had, and still the guy is almost getting death threats. And that obviously comes from people that pretty much only buy here and bitch and bitch and bitch and bitch about life being unfair. I'm surprised that guy hasn't sold out yet. He's probably gonna sell out somewhere around here, and then Minera might do something like that. And he's gonna find another sector. But it's just absolutely disgusting to see. Absolutely no self-awareness. Doesn't understand markets. Doesn't understand the cyclicality of the mining sector at all. Takes no responsibility. Takes everything personal, and can't believe for the life of him that he can be down on an investment. So yeah, in my opinion, I would say Bear Creek is the closest thing to a benchmark for the average junior. And Bear Creek is down 95% since the top. And you see this in Bear Creek Mining a lot. So every now and then it goes on year-long, sometimes only month-long corrections. What has happened to Bear Creek every time or every after correction when it's still around, which is obviously is because it is still around? It goes up hundreds of percent. So even Bear Creek was probably way too cheap here, way too cheap here, way too cheap here. Probably too cheap here. Now they have leverage though. I think they have debt and stuff. So it's again a bit risky where it's like, it's not a timeless option or an option that doesn't expire. Because if you're a producer and have shitty prices or a shitty business, then you actually risk you run the risk of bankruptcy. But I will tell you this, that if or close to being, in for a 2001 bull. If Bear Creek is still around, this is gonna go up hundreds of percent again, maybe 1,000%. Who knows? I mean, if we're talking we might be near the bottom and in for a 10-year bull. We have no idea. We just know historically this sector never ever stays this cheap for long. That's just how it is. I mean, here it got extreme, insane bounce. Here it was already too extreme. Started a bull leg, not a bull market I would say, but a bull leg. Too extreme again, went up hundreds of percent, and now we're back. And this whole period here looks pretty abnormal. But that's what I think Rick Rule means. That's like, and some other, well, you can see that in the miners kind of. That's like, in a sense, we've been in a 13-year bear market. And this is what happened after an 11-year bull market. 13-year bear. So if we've had 13-year bear, you can imagine how big the next bull is going to be. So I think this is the kind of actually the benchmark, or at least of the random junior. So what this tells you, kind of, I mean, if I don't know when people exactly, I mean, this is the top tick. But even from like this period here, it's like, this is still 93%. I mean, yeah, talk about, having crashed. The point is that even though it's hard to believe, if you're just down 50% in your, let's say, junior portfolio, you are greatly outperforming the average junior miner. And if you're down on almost every single stock over the last 3 years, that's not unique. That's not unique at all, actually. The thing is, and I say this all the time, and I've shown this, how can I afford these, bear markets, 3-year bear markets? Because I'm always 100% long from every low. And I buy even more the lower it gets. And I do the value shuffling. During any one of these low periods here, some companies will be more undervalued than others. So when I come out of the bear, my portfolio typically goes on an absolute rampage. And since I'm not the worst in stock picking, typically I'm not down much more than 50% in worst case scenario going into the bottoms. But there's not a lot of stocks that are, if you have a 20-30 name portfolio or something, especially if you're focused on gold or silver, I mean, pretty much all will actually be down over this period. And that is nothing that's super extreme. Because again, it's like the average junior is probably down 70%, 80%, 90%. So if you're just beating that, you're actually doing better than the sector, I would say. Here is like, it's not exactly like Minera Alamos, but obviously there's been a lot of chatter about line 1. What was the point I was gonna make? Well, kinda again, it's like, when do most people buy this? Well, actually, I mean, let's say it's down to, let's say you have an average here, you're still down like 55%. Yeah, that sucks. I mean, typically the loudest mouths are the ones that only buy this, the absolute highs. They buy in here, only buying in. It's fine to, it's like I say, it's fine to buy high if you also buy low. That's the thing. Because since I'm not a market timer, I'm buying up here as well. I bought up here. I just try to ramp up my buying, and always kind of be active with value shuffling at the lower it goes, because it's down here that changes in prices make the risk reward in some stores go absolutely extreme. And here we have GDX. So this, I guess, I mean, yeah, I think Gary Savage expect there to be, this is not the Huey, but I mean close enough that it might get a bit lower. But note something, and I pointed this out before during corrections. Note how it tends to, again, shake people out. So here you had a low set here, okay? What happened here? Broke down, actually went up a bit, looked like a fake breakdown, which got people, I guess, or probably very bullish, but then it broke down again and kind of undercut the new low. One could say that. So it kind of broke, let's say 2 in a row. And that probably got everybody absolutely panicked. Because I faintly remember, if you're looking at this chart when it's happening, let's see. If you're looking at this, let's go back in time and imagine we're here. Does this look like something that's, it's certainly about to turn around? Oh, this is for sure a bottom. No, that looked like a falling knife that was just cutting through everything and broke, every single resistance line and all that. And lo and behold, that was actually turned out to be the low. And here you have the same kind of thing here, making some kind of bottom here, broke down, actually fake breakdown, went up, probably got everybody bullish up here because new high. So first of all, when it broke down here below these here, people panicked. Then it turned around, looked like a fake breakdown, which got people a bit more bullish. That hey, maybe this is the bottom. It ramped. I don't know how much it ramped, and of course juniors typically ramp even more. So it went on a 30% ramp in GDX, which is pretty impressive. Obviously, a lot of people that were trying to time it probably thought this is now we're in a bull. This was the bottom. Fake breakdown, higher high, and all that. So maybe they bought in here because it broke out of, this high, going back down. Okay, pew. Well, not pew, but it's like you're immediately down 22% in a short time frame, and you're holding your breath. Oh, it bounced. Maybe you didn't sell here. It bounced. Okay, bounced. Oh, okay. Bam, broke down again. And now we have like, this support, this support, this support, this support, this support. So a lot of supports, or times, basically, looks like pretty firm support. Broke down. I remember that specifically this time period. I was buying silver standard hand over fist, if I remember correctly, because the thing is, silver had been grinding for like months or something, or almost a year, just grinding, went nowhere really. Everybody was complacent, nobody was buying. And then silver was down, like, I think the metals were down. That's funny that I almost can, visualize it. Almost broke. Metals were down a bit, like 1%. The miners got absolutely flushed. Silver standard, I think around this time was down 10% on that day. So 10x leverage to the price of silver or gold. So it wasn't even a big thing in the metals market, but I don't know if it was fund redemption or whatever, but they just got absolutely flushed. Here. Yeah, this is probably the day here, yeah, but boom. And I just bought so much silver standard because they had like, I don't know, 150 million in cash or something. Pretty much one of the safest de-risked stories out there. No risk of bankruptcy at all. And it just got a 10% haircut. That proved to be the bottom. But this was panic mode when I was panic buying. And let's see here. I guess one could say this is support, broke through that. Maybe somewhere one could say this is support, and there's a gap here, whatever. But it broke down here. So imagine, it just breaks resistance, and obviously people are getting more and more bearish. And then it turned around, okay, went up quite a bit of rally. Then this, I remember, this was the most boring period ever. This went on for many, many months. This was basically, what's that? Yeah, 1.5 years of just sideways action, went nowhere. And of course, now we have, one could say, this is certainly fat support, right? Fat support. You do not want to see this break, right? That's what everybody, kept saying basically. And then you have, last resistance here, broke down. Oh shit. Then you see the falling knife action again because people panic. And it actually took it down below this as well. And then, okay, it finds some kind of footing here, bounces, boom, another like breaks down below that. And this turned out to be the bottom for the next, well, until the COVID flash crash. So for the next almost 2 years. So again, horrible short, panic selling, falling knife, best opportunity to buy when it was just looking like it's never going to stop falling. And of course, then we have the cold flash crash. And again, the thing with this is like, I mean, who knows? I was going to say, when did people actually get bullish here? I don't know. Maybe people were waiting for this to break out. I mean, it briefly did and then just got absolutely slammed again. And from what I can tell, I talked to people, like there were a bunch of, technical analysts and stuff like that basically, said sell down here, worst sell in a long time. Anyway, you can kind of see the similar stuff, like, okay, breaks down resistance, continues down, then goes onto a rally, fake breakdown here. This is what this sector does. It's like, that's why I don't like to be a trader, because the amount of fake breakouts, I mean, you can draw the lines wherever you want. It's like, oh, higher high, boom. Oh, broke down below resistance. Well, it kept going for a bit, and it's like, okay, depending on where you want to have the resistance or support, maybe here and there, and then broke that too. Then boom, up. Then it broke higher from these levels. Boom, okay, looks like a back test. Okay, nice, bullish. I bet a bunch of people get bullish here because it looked like a back test. Went up slightly higher, boom. And even like, cut through this support, and then it turned around. My point is that, like, I think you have to be nuts or extremely good to make any money trading this. And it's like, why would I? It's so it's so goddamn hard. I'd much rather just, well, first of all, be a stock picker, and then just, hey, it's extremely cheap. Let's buy every month in, and, buy every year, and then boom. And, same thing, buy more and buy more. It's like when this sector turns, it goes up a lot. GDX, J, I mean, you can kind of see the similar things here. It's like, break down below this, turns around, broke even this for like a day or something, turned right around. Here it broke down at least below this one, and this one obviously turned around, fake, I don't know if I should call that breakout, but it's like, okay, higher high, same thing here. It's like, oh, higher high, boom. So basically, what do you think this sector is going to do? It's going to do the complete opposite. SILJ, I mean, fat correction, broke down, turned around, broke down even lower. So I have no idea. Maybe the absolute low will be, here maybe a last, I wouldn't be surprised if they broke this resistance, because that's typically what it does. I mean, here it broke down, ultimate low, boom. Here it's like spike lower, and this kind of spike, boom, ultimate low. I mean, from the breakdowns at extremes came the most extreme rewards. And we're already at extremes. So if it breaks here, that's a breakdown during an extreme already. So just be aware of that. It's like, in my opinion, do not panic if expect this to kind of break. And then you might have, I don't know, a week or something to get in at the, I don't know, best price in the next 10 years or something. I mean, that's how extreme it is. That's how extreme these times are. And that's why I don't dare. Do I give a shit if the low is here or there, or are we already at it? No, because from these extreme levels, I'm already gonna make. It's like saying that if you bought here, that was a mistake because it went like that. No, because there was no guarantee it would go like that. What if this actually just kept on going? Then you didn't even get a low, then you missed out and maybe buy back here, so now all of a sudden you're at 130% returns instead of just, I don't know, holding and buyer lower and getting your average down. I mean, you see how the returns just, go absolutely bananas. I mean, this alone is like, I mean, take this, 286, 380, so it's like 100% return addition. And that's not taking anything away from the returns here. But if you wait for a bull market, it's like, I don't know, you might cut your bull returns in half. And I'm not ready to do that because I know it's so extreme that I think we're certainly, around these levels right now. And I mean, you can actually see that in the chart here. So, yeah. So way past the point of selling in my book. I've looked at some producers, actually, and yeah, I mean, some high quality producer, good management. I mean, I bet people are bitching about B2 Gold as well, but it's like, it's not sure. Actually, I mean, if you look from like 2009, I mean, to now, that's not still a great return. But the thing is, if you tend to buy cheap, if you buy more here, sell somewhere up there, buy more here, sell, whatever. It's like you can make money if you have that value mindset. You're not going to be like everyone else who they get into a sector here, bitch and moan about you can't beat this market when down here, sell out there, of course, then buys back up here because, oh, now it's running again, I see people making money in it, now it's my time to get rich as well. You can do it that way, but you're never going to make any money. Endeavor Mining Corp, also one interesting, and here you can, same kind of pattern. I mean, I talked about this last time. I think they're expecting like 6% dividend or something for this year or next year or somewhere along those lines. That's a pretty good dividend for a growth profile producer, which seems to be pretty well run, except for the drama with the CEO, of course. And I don't know what the outfall is going to be, or the fallout is going to be from that, but still, I mean, you can see it here. It's like, okay, I mean, doesn't this here look like this? Okay, long is like, here you have a support briefly touched below it, and that kind of looks like this. Went up, made a higher high, went back, and in the COVID flash crash, it actually broke, earlier supports. Again, I'm not a trader, I'm just pointing out how much this market fakes out people. And that's why I'm not a trader, or I should say, it's like why nobody's bullish when I'm bullish on beta, if you know what I mean. Broke this obviously, and broke this one and this one, and then for a day, and then boom, this is literally within a day, and then it's already up. In 2 days it was probably up, I don't know, 40%. I mean, it's just remarkable. So that's the thing, and that's what Ross Beatty says. You have for the people that think they're clever, that they're maybe selling with a 10% profit in a daily swing or something. When this sector gets going, this is a pretty big company. I mean, it went up 150% in a short order. Here went up 548%. So that's his point. That if you're playing for trying to get one of these, you're gonna miss the big opportunity. And again, I mean, in my opinion, this reminds me of this here. Fake break up. Okay, so panic selling by traders here went up. Absolute panic selling broke down briefly, went straight up. So what BT says and other ones say that history suggests that juniors, etc., can go up 100 to 300% in just a month or so when it actually gets going, because we've seen that before. I think I'm gonna wrap up this video now actually and do a two-part video or something. If I mention any stocks, consider me biased. I actually own a bit of Endeavor. I bought it for the HODL portfolios as well. Cause like I've been saying, beta is actually going up in value despite my fascination with alpha. It's better risk reward, especially if you're new in this sector, to actually buy beta. They're ones that are gonna turn first as well. Then it's gonna trickle down to the juniors. But from absolute bottom to absolute top, the juniors obviously do best. The ones that are still around, etc. Because I mean, Endeavor might do 200% in the next year if this is actually the bottom, or next 2 years. But junior, that's super cheap right now, and typically the juniors are cheaper than the majors, even though they're more risky, obviously. But if you have some kind of success as well, like a discovery story that actually keeps growing for 2 years, it's going to go up way more than 200% if the larger companies go up 200%. Those might go up 500 to 1,000%. That's just how it is. So again, how big of a problem is 50% down now in juniors, which are the ones that will go up the most as well? Not a big problem if you ask me. Not investing advice. Thanks for listening. Bye.